So the 10K strategy ebook is rocking it right now. I'm getting some great feedback on how it's helping people to understand what price action trading was all about. Now, in this ebook, you're going to learn everything you need to know about using price action trading strategy. But we're going to go through right now exactly some of the techniques that you learn inside that ebook. And if you want to grab that ebook, keep watching till the end. You can find out how you can grab that ebook for yourself. So let's first look at what a support resistance should look like. So I've done a sketch here for you to show you the idea of a support and resistance. Now what we should look at is this high here in the market. As we see this move to the upside, breaking structure, okay, this becomes our area of resistance. The market pulls back, creates this high swing low and pushes to break through that resistance. Now the idea of support and resistance is you're looking for the market to come back to hold at that area of previous resistance to become support. Now the same is said when we're looking for a break of support to act as a resistance. This is classed as your area of support. The market's to break through, pull back, retest from below to act as an area of resistance. Now this isn't exactly how I trade today, but this is the strategy that I used to use and it works and it's very powerful once you understand. Now the reason is we don't look at this as a single level. Okay, we're looking at it as a zone. Okay, so we're looking at it as a zone in the market. So what we can see here is a zone where the market is going to hold. Okay, so this is an area where we expect to see the market to hold within that zone. Now there's other parameters we use for looking for a trade here, but you'll learn all of that inside that 10K strategy ebook. So that is the simple term of a broken area of resistance to become support, broken area of support to act as resistance. Now you'll be able to see on the charts, when we go over to the charts in a moment, how this acts over a period of time, not just on a simple break retest. It can happen over months, can happen over weeks, even years. Let's go now to a price chart and we'll have a look at this on a price chart. So on the Euro USD on a daily time frame, okay, and we can see where the market's come to the downside and we've moved back higher. Now the idea is we're looking for where we can see the market. Okay, we can see a previous area here, break to downside, retest from below. Okay, that is your previous area of structure, which is a previous bounce of support. Okay, broken through and active resistance from below. Okay, the same thing we can see here in the market. Okay, we break through to downside, we pull back, and we just about retest it, okay, to that point of that level. You can see how these levels actually do work. Okay, the same is said when we see the market here, that we can actually mark out a previous break to downside, retest, okay, and then we continue to break through again, pull back. Now this is where the actual areas of just levels of structure like support and resistance don't work that well. Again here, okay, we break out and retest. If we was to use these as, we just back all that off and we use these as zones, okay, instead we have a zone here in the market. We have another zone here we can draw. Okay, and you can see how the zones work better. Okay, once you can see a zone in the market, you can see how we break to downside, retest from below, break, retest from below, break, retest from below a couple of times, breakout, retest from above. Okay, that's how we look at the zone in the market. Again, here there's another zone. Okay, we break out, retest from above. So when we're looking at a support resistance, remember we're looking at a zone in the market. You're not looking at a single level in that market. And then when we come back to these zones, that's where we're going to implement the use of the candlesticks. Okay, we're going to look at three types of candlesticks. We're going to look at the pin bar, where we're looking at the engulfing candlestick, and what I call the combination of the two, the pin engulfing. Now, if you're new to candlestick patterns and how to trade them, keep watching because you're going to be able to see exactly how you can use these candlesticks and the power of them when taking a trade. Now, what we really want to be doing here is dropping down a time frame, okay? So let's just take for the moment this previous breakout here, pullback. We want to go down to a 4-hour time frame, and we'll be looking for these candlestick patterns to occur. So before we go through now to looking for a potential trade here, how to use the candlesticks and what you'll be looking for a target, let's now go over and look at those three types of candlesticks in more detail. So let's look at these candlesticks, okay? So we have the engulfing and the pin engulfing candlesticks, what you can see here. And then to the right, we have the pin bar candlestick. So the engulfing candlestick, we can see a few different variations. So the normal one is going to be, we're looking for the candle to engulf the previous candle. So from the high to low engulfs the previous candle. Very often you're going to see the body engulf that candle as well. Now it is better when we see the body engulf the candle as well. A lot more power is in that move. Now the other way we can see it is we see the entire range being engulfed, okay, and we want to see it closing down through that low, as you can see here. But we don't have to engulf with the body. Okay, we can just be the wick to the upside, which engulfs that previous candle. And then we have here, which is more like a pin engulfing candlestick. And again, you want to see it really closing down through the previous candle's range low and take the full range. But it's more of a pin engulfing because the actual wick is normally going to be greater than the body of the candlestick. That's a bearish looking engulfing and pin engulfing. And then we have the bullish one as well. Again, we're looking for the candle to be engulfed by the body to the upside. And then the next one, again, we can see this one is engulfed. And in fact, what I have actually just realized I made a mistake here is that these bodies, they should actually be a bearish closed candle. Let me just quickly change those so they look right. Okay, so it looks better for you to understand what's going on. So you can see that we engulfed the upside, okay, totally closed through, and we just about closed that low. So we have a small wick to downside. And this one is then a closed through again, but then we have a wick which engulfs through, and this is more of the pin engulfing. Now, to the right, we can see the pin bar variations as well. This is what we're really looking for, is a small body candle, small upper wick. We're looking for a bullish pin bar, and a long lower wick, okay? The idea is at least to see the candle wick 3 times the length of the body. That's going to show you that there's more buyers coming into that market when we see the market push it down and the buyers push the market back up. Okay, so the market is opening at this area, okay, and closing at this point, but we do see the push down. Now, we can have a bearish close as well on a bullish pin bar, like you see here. We don't have to have a bullish close. We can have a bearish close because the pin bar is not like the engulfing candlestick. It's a completely different candle, and it's going to form at a different area on the chart sometimes. Now, there's a variation of a bullish candlestick. We can have a candlestick like this, but much longer, lower wick, okay? That can come within the pin engulfing if we see it engulf a previous candle's body, okay? Like we see over here on this example here. And we have the bearish pin bar, okay? Just the opposite. Again, you can have a bearish or bullish pin bar. So we can have a bearish pin bar like this, or we can have a bullish closed pin bar. They all will work absolutely fine. Now, there is a criteria I also use when using pin bars, but you'll have to go through that 10K strategy ebook to really understand how you apply that in your trading. So that is the actual candlesticks we're going to use when we're going through looking for those trades. Remember, they are used at certain locations. Again, all of this you'll learn through that 10K strategy ebook. Let's head back over to the charts and look at these candlesticks on the charts. So now back on this 4-hour time frame, let's see if we can see a potential entry as price comes back into this zone, okay? So first we're looking for the market to show us that breakout. You can see we have a push up, pull back here. We just get the arrow to, let's see, you can see what's happened. We have a push up, okay, pull back, and a breakout, okay? That's what you're looking for. So once the market pulls back here, we can start to look for those candlesticks. Remember, we're looking for the engulfing or the pin engulfing candlestick or that pin bar. So a quick look on the chart, I can see a pin engulfing that I would like to take on this trade. Can you see that candlestick? If you can't, just pause this video for a second and see if you can see one of those candlesticks we just went through. So in case you didn't see it, this is the pin engulfing candlestick. Why? Because it's got a lower wick body which engulfs the previous 2 candles. That is a great area to look for a trade, and not only that, we also swept this low. Now that's something completely different. That's what I teach inside the community, okay, when you understand the use of liquidity in the market and actually imbalances and supply and demand and everything else. But that is a different way that we look at trading. This is just for you to understand the use of a support and resistance, the candlesticks, understanding how you can apply that in the markets. So when we're taking this as a trade, we have what I call a FSA and an FRA. Now, again, you'll learn more about those techniques inside that ebook, but this is what we call a FRA. And this is where your first target would be. So if we're taking an entry, okay, off this candlestick, you take it off the close, your stop goes to the low, your first target is always going to be this high. And there's a reason why we do this. And you can see this trade would have worked out, okay? And you get your first just over 2 risk to reward, okay? 2 to 1 risk to reward. And then you can hold that trade, okay, for further profits. It's understanding these levels, which is actually going to get you at an area to get a profit in the trade in case it could reverse, because it could reverse at this level and head lower. And it's always about putting the odds in your favor. And again, you'll learn about these levels inside that ebook, so don't worry, I'm not going to go through it fully today because this video will be so long and we don't want to do that. I want just to really get you through to understand the use of this. So you can see here, great trade, okay? A pin bar, pin engulfing, sorry, here, continue up. Now, before we get this candlestick, let me just go closer into price. Went through the variation of the pin bar as well. And we have this high, wick through, close back down with a small bearish body, okay? Small lower wick and a longer upper candlestick. That is a pin bar. Now, understanding that this happened to this swing high, I expect it to continue down to take this low here. That'll be my first target area. Okay, again, you'll learn all that inside that ebook. And that's where the market went to. And then we went down to take the next low. And that's how you can look at trading that pin bar. So you have a pin bar example and a pin engulfing. Now, this is going to be a much higher risk trade. Why? Because we're going against the overall trend. Now, when I say overall trend, I mean by the swing structure, okay? This is something that you'll learn more inside the community if you decide to join, and you can see the market pushes up. Okay, so this is against the trend. So this is a very risky trade, but I just wanted to show you that is a type of pin bar that you can trade, but this is a better trade setup because it's showing me off this area of support. Okay, remember this is a previous area of resistance, broken. Okay, so previous resistance area, broken through, pulls back to act as a support area, then we find our entry. Okay, that's what we're looking for using this type of strategy. So let's look at these bearish moves now, okay? See if we can see the same sort of thing. So again, we can identify the market comes down, bounces up, comes back, final bounce up here, we break through, we pull back, okay? And we continue down. So again, okay, we're looking for the market to come back to this zone, okay? Previous area of previous support, acting as a resistance. Yeah, we can see an actual level here as well, which does work. So you could use a level if you wish, okay? But you see the zone works well as well. But a level will work as well. You can use levels. In fact, levels is something I used to use all the time. So again, what do you see here? Okay, remember those candlesticks we went through a moment ago. We pull back. We're waiting for price to come back into that zone. That's our zone area. What do we see? We see this pin engulfing candlestick. Look at this. Okay, big long upper wick, closes inside this range, so we take 2 candlesticks. Again, that's a great entry. Now, for a target here, this is my first target. Again, you'll learn why that's a first target inside that ebook. The market goes straight there. Risk-free trade, we never take the high, and then we continue to fall, take the next low, swing low, okay? So you can see what happens. Great trade again. So the market continues down, we pull back. Now, on this occasion, okay, we don't really have an entry. We don't have a pin bar, a pin engulfing, engulf candlestick here that you can trade. We just have a big drop, so there's no trade there. The market then holds, and we continue to break, and we pull back once again. Okay, so the market comes back here. Now, we don't have a candlestick pattern here either. We can trade at the time, but look, the market comes down. We have this candlestick. What is that? That is a pin bar. Okay, there's a pin bar reaction. Okay, lower high pin bar. Okay, and in fact, that is an engulfing pin bar. Okay, so we engulf the previous candle. Again, good entry off that candlestick. So where would be my first target area? Okay, well, looking for a first target area was probably going to be this level here, but that's very close. So this will be the next level I expect price to want to go to. So from this entry, this will target this trade. You can see a nice bearish move here to the downside. That is how we're looking at trading the use of a structure area like a support resistance and those candlesticks. Now we can actually look at a daily at that area as well to show you the same thing on a daily chart. So when the market does come down, we pull back. Do you see this structure? Okay, nice big long upper wick. It's a pin bar, but it's actually a pin engulfing because it engulfs the previous candle here and here. Look, 2 candlesticks. But because it's such a big candle and we haven't got much space here, our first area we expect the market to go is going to be this level. But again, it works out. You would have had some profit on that trade. We never get stopped out and we continue lower. We break through, pull back. What do you see here form? A small pin bar, okay, off this area of structure, okay, where we broke through support, come back with resistance. We held, create a pin bar. Where's my first area expect the market to go? This level. Nice trade to downside. So you don't have to trade the 4-hour. You can stay on a daily. It will work on a daily too. Again, let's just remove this area and this one, and just have a look and see what we can see. So on this occasion, the market, okay, we break this structure, we pull back, reaction, okay, bearish, not a great looking pin bar at that point. But the next candle, this one, is a good looking pin bar. Why? Because look, okay, with long lower wick, small body, okay, my first potential target is going to be take this level here. Where does it go? It goes to level. Now, we may have been stopped out, you may not have been stopped out, very close. You're off the area structure, you're looking for a trade. Now, this isn't the best type of pin bar. There's some more things we're looking at, okay, when we're using a pin bar. And you will learn more of that inside that ebook. But this pin bar will be better, and let me just draw it out. If this pin bar had formed, okay, now I can't exactly do what I want to do because of this way the things are placed on the chart. Let's just shrink it down a bit and see if we can move this box. Okay, so if the pin bar had actually formed here, okay, instead, where we are here, this is a bearish candle down, and then we create this pin bar with this low, that's a better time to take an entry using a pin bar. Okay, so like this, okay, so we see this pullback here. If this was a pin bar, this would be a great opportunity to go long. We broke out, pulled back, great looking pin bar here, then I'll be happy to go long with this trade. Let's just have a quick look at the 4-hour on that area, see what you can see. We have a breakout, pull back. Okay, so you can see we close down, we break back up. There's no actual pin bar engulfing or anything there at the time. So what we can do is we can check here on a 1-hour time frame. Now we'll have the zone on there. And again, that's not really a pin bar. There's no engulfance. Let's have a look at a 30-minute. And this is something you can actually look at as well, different time frames. Again, here, we don't have anything there either. Okay, so again, it's a bearish candle, inside candle. Now, there is also the inside candle you can trade. I haven't included that in this video today, but that's all inside that ebook. So you'll learn more about the different candlesticks in there. So there's no trade here we could have taken based on the candlesticks. So understanding candlesticks, we don't have a trade. Now there's other ways we look for trades here, and that's something that you learn inside the community, how we use supply and demand approach with market structure. But for this area, this would not have been a trade using the actual support and resistance and those candlesticks. So that is how we can look at a simple support and resistance type of strategy with those candlesticks. Now, if you want to check out in more depth this type of strategy and you want to get that 10K strategy ebook, then you can get it right now because there's a link popping up for you to go and grab that ebook.